Amazon, the e-commerce titan, has taken a tumble. Its stock price has fallen recently, leaving investors scratching their heads. Some see a buying opportunity, others are wary. Is this a chance to grab a piece of a market leader at a discount? Or is this a sign of trouble ahead? Let's dig deeper. We'll explore the reasons behind Amazon's recent performance. We'll analyze whether this dip is a temporary setback or a sign of deeper problems. This analysis will help you decide if buying Amazon stock right now is the right move for you. Remember, investing always involves risk, but understanding the situation can lead to informed decisions and potentially profitable outcomes. Let's dive in. The recent drop in Amazon's stock price has sparked debate. Some analysts believe it's an overreaction. They point to short-term concerns overshadowing Amazon's long-term potential. Others are more cautious, suggesting a deeper reevaluation of the company's prospects.
One common argument for the overreaction camp is the overall market sentiment. The current economic climate, with fears of inflation and recession, has pushed investors towards safer havens. Tech stocks, often seen as riskier assets, have been hit particularly hard.
However, dismissing the drop entirely as an overreaction might be premature. Investors are also reacting to tangible factors like rising inflation, which could impact consumer spending, and in turn, Amazon's retail sales. Additionally, increased competition in both e-commerce and cloud computing adds another layer of complexity. The key is to differentiate between temporary headwinds and long-term challenges. Is Amazon facing a fundamental shift in its business, or is it navigating a turbulent but ultimately surmountable economic storm? Despite recent concerns, Amazon's core businesses remain strong. The company continues to dominate e-commerce, holding a significant market share. Its global reach and efficient logistics network are difficult for competitors to match.
Beyond e-commerce, Amazon Web Services, or AWS, continues its reign as the cloud computing leader. With businesses increasingly shifting operations online, the demand for cloud services is only expected to grow. This makes AWS a significant revenue generator for Amazon and a driver of future profitability.
While growth in these sectors may have slowed compared to pandemic-era highs, the long-term potential remains undeniable. As more consumers embrace online shopping and businesses transition to the cloud, Amazon is well-positioned to capitalize on these trends. However, investors should remain mindful of potential challenges. Increased competition in both e-commerce and cloud computing could pressure margins. Additionally, Amazon's heavy investments in new ventures like grocery delivery and healthcare could impact short-term profitability. The recent dip in Amazon's stock price has caught the eye of value investors. They look for companies with strong fundamentals trading below their intrinsic value. The question is, does Amazon's current valuation make it a bargain?
Historically, Amazon stock has traded at a premium. Investors have been willing to pay a higher price for the company's growth potential. However, the recent drop has brought its valuation closer to more reasonable levels.
This doesn't necessarily mean Amazon is undervalued. Investors need to carefully consider factors like future earnings, growth, profitability, and competition. A thorough analysis is crucial before concluding that Amazon stock is truly a bargain. However, the current price does present an opportunity for investors who believe in Amazon's long-term prospects. If the company can navigate current challenges and capitalize on its growth opportunities, the current dip could represent an attractive entry point. By understanding market cycles and maintaining a long-term perspective, investors can make more rational decisions and potentially capitalize on market fluctuations. However, it's equally important to avoid getting caught up in market euphoria. During bull markets, when prices are rising rapidly, investors often become overly optimistic. This can lead to buying assets at inflated prices only to see their value plummet when the cycle turns. Recognizing these cycles can help investors make more informed decisions. During periods of excessive pessimism, like the one we're experiencing now, high-quality companies can become undervalued. This presents a potential buying opportunity for investors willing to ride out the short-term volatility. Section 5. Riding the market roller coaster. Understanding market cycles is crucial for successful investing. Markets move in cycles, alternating between periods of optimism and pessimism. These cycles are influenced by factors like economic conditions, interest rates, and investor sentiment.
Section 6. Technical signals. Green light ahead. Technical analysis can provide additional insights into potential buying opportunities. Technical analysts study price charts and trading volume to identify patterns and trends. These patterns can signal potential turning points in a stock's price.
Several technical indicators suggest that Amazon stock might be nearing a bottom. For example, the Relative Strength Index, or RSI, a momentum oscillator, shows that the stock is oversold. This could indicate that the selling pressure is subsiding.
Additionally, Amazon stock has bounced off its 200-day moving average, a key technical support level. This suggests that buyers are stepping in at lower prices.
While technical indicators can be helpful, it's crucial to remember that they should not be used in isolation. Fundamental analysis, which focuses on a company's financial health and growth prospects, should always form the basis of any investment decision.
Weighing the risks and rewards, buying the dip in any stock, even one as established as Amazon, comes with risks. Market uncertainty could persist, impacting Amazon's stock price. Competition in e-commerce and cloud computing is intensifying.
Macroeconomic factors like inflation and potential recessions could impact consumer spending. Aggressive investments may not yield immediate returns, pressuring short-term profitability.
However, the potential rewards are substantial for long-term investors. Amazon remains a dominant force in e-commerce and cloud computing. The company's track record suggests an ability to adapt and thrive.
Ultimately, the decision depends on individual risk tolerance and investment goals. Section 8. Amazon's future cloudy with a chance of profits. The recent dip in Amazon's stock price presents a conundrum for investors. Market overreaction and the allure of a potentially undervalued company create a tempting buying opportunity. However, macroeconomic headwinds and competitive pressures introduce uncertainty. Understanding the factors driving Amazon's performance is crucial. The company's ability to navigate challenges and maintain dominance will determine its future success. Investors should conduct thorough research before making decisions. Staying informed about market trends and company-specific news is paramount. The road ahead for Amazon may seem cloudy, but the potential for long-term growth remains.